Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray, feeling good. Lewis from the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania, where the police are no longer making arrests because they don't want to expose the criminals to this terrible virus. Folks, I posted a chart here of the euro. This is over the last couple of weeks. You can see the large ABCD pattern. We now broke below the lows of February 20th, as you can see that. And what I did for the 24/7 service, we've been short since 113.30, and I said to put a buy stop at that red line, which is at 107.80, and I couldn't believe it. 15 minutes after I sent that in, this thing exploded to the upside, and I'm going to show you. Hey, look, hey, guys, I'm just a technician, and I'm a pretty good one, but by golly, I don't know a lot, and I do know sometimes a lot less than I think I do. But take a look at what just happened here. We've been watching this very, very closely, and I think it means something because it's real money here. Hold on just a second, Terry. I want to cover that in just a minute. You'll notice here the low we made back on February the 17th was a 382. That's when the euro hit the 115 level. Now look what we've done, folks. We've made a 1.618 expansion. Now I realize that it's a straight up move, but it stopped exactly at the number within 3 pips, and that's when the euro flipped over. So I don't know if it means anything or not, but I know that we are very, very close to something incredibly important. Terry's made a comment, does anyone believe the number of cases that have flattened in China? It's hard to understand what's going on because if you stop and think of the numbers, folks, let's say there's 3,000 or so people that have supposedly died in China. Let's multiply that by 10. And so that's 30,000. Okay, what's 30,000 into 1.4 billion? Folks, we lose 1,500 people a day just to smoking illnesses. I'm afraid this fear thing has gotten totally out of control. It's worse than the disease itself. I'm almost sure of that. Let me give you an example of what's going on in the world here. If I could, don't tell me I can't find this thing. Are you kidding me? Oh, shucks. I had the picture from the newspaper. What did I do wrong here? Doggone it. Well, let's not worry about it. Anyway, it was a picture from the, here it is. I did find it. This is from The Guardian, which is one of the most popular, it is the most popular paper in Europe. And I just want to show you, these are the top 10 stories in The Guardian, okay? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, all about the virus, okay? Now, I know, don't want to go there. Let's move on to something else here. We'll just talk about the markets a little bit here. Anybody has any questions? It's 877-927-6648. I believe we're starting to get some ideas that we're getting close to some pretty good things here. This is, I want to put up a card here. 1 second here. I want to put up a chart here of July corn. You'll notice that we went below the 1.618 expansion of the move. We're below cost of production, so if you want to be a farmer, now's the time to do it. That's all I can tell you. It looks pretty interesting. Take a look here. Here's another one that looks real interesting. And remember, folks, I'm just a technician, and these patterns are for risk control. They do some predicting, but they're for risk control. Here we are. With soybean oil down at 25 cents. Look at the ABCD pattern up at 36 cents, where everybody in the whole world wanted it. And that was at a 1.618 expansion. Now it's at a 1.618 expansion on the downside, as you can see, and nobody wants it. Gee, there must be a lesson there somewhere. I don't know. Take a look at it. I don't know. Just a pattern. Who knows? All I do know is here is the ball game, boys and girls, for what it's worth. Pay attention because you're only going to hear it once, and it may not mean anything. This is the price of the most heavily Traded, well, I don't know if it's heavily traded, most widely held stock, okay? As you can see from February to where we were last night, that we have a beautiful A, B, C, D pattern coming in at the exact number at 234. We're now trading a little bit above that, but I don't know how much above it. So this is a perfect ABCD. Now, if the rest of the market would have done this, it would have been okay. But the rest of the market, dropped off the bottom of the page because of all the fear. But there was not that much fear in Apple. If you look at the ABCD and Softy, Microsoft did exactly the same thing. Now, what's interesting about this pattern, and I'm going to let you use Twentyman's favorite phrase, defy human nature, do the work yourself. Go to the high that it made in February, down to the low on February the 28th, and then we had that really strong 3-day rally, okay? Count the number of days from the high to the low, and then go for the point C and count the number of days from the high to the low, and you'll never guess where it comes in. Who's going to take a guess? Judge's ruling, it was yesterday. And if you look really closely at this chart, you're going to see a really nice little 3 drive to a bottom pattern in here when the whole world, we're talking about the Dow being down 2,000 and 3,000 points, and Apple can't even break. This means something. It also means something that if Apple goes below 235, it's every man for himself. So just remember that. 235 is what you want to be looking at. We've got a caller from Las Vegas, Nevada. Alan, are you there?
Yeah, I'm here.
Alan Rosenberg, how are you, my friend?
Okay.
What can I do for you, buddy?
I haven't heard the word capitulation, so what would capitulation look like?
I have no idea, pal. I really don't know. That's I'm a technician, Alan. You've known me for 30 years, and I really don't understand some of that stuff. And they make up these words, but I really don't know. You might Google it, Alan. That might be. Hey, by the way, is Vegas pretty much shut down now?
Oh yeah, everything. Yeah.
Yeah.
I mean, the only thing is we don't have a lockdown, so you can go out and drive your car, but everything's shut down.
Wow.
Yeah, restaurants, it's all takeout, no sit down. All casinos closed. Every gambling device shut down. Mm-hmm. So like a 7-Eleven or a supermarket, every gambling device in the state is shut down.
Wow. I've never heard of anything like that before. Someone's did a great job of scaring the bejesus out of everybody, I think, haven't they?
Oh, yeah.
Well, listen, thanks for calling in, pal. I really appreciate it, and we'll be chatting soon, okay?
Okay.
Thanks a lot, buddy.
All right, bye.
Okay, we've got Mr. Z on the line from Euroville. What can I help you with, my friend?
Yeah, Larry, thank you for taking the call. What a fabulous little trade. Well, little. Turned out to be a big trade on shorting that euro up over 113. Larry, I'm not trading that. I leave that to you, and just look over your shoulder with admiration.
Hey, we gotta take a break, Mr. Z. Stay with us, and we'll be right back with Mr. Z from Philly.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. We're talking with Mr. Z from Philadelphia. John, what can I do for you, my friend?
Yes, Larry, thank you. So, in looking over your currency trading shoulder, looking with admiration, I have to ask this question, just for tutorial's sake, not forecasting future, not looking for the next trade. I ask you to share with us in picture form, if you have it, why, when the euro rallied from February 20th, it was down there, pick a number, 108, and it surged into March 8th, 9th, 10th, got up to 115. So 108 to 115 in just 2 weeks' time. Mm-hmm. What was it in your pattern work and your tools that said, hey, this is a low-risk short sale, win or lose? I'd like to know the answer to that question. I look at the charts, do my stuff, Larry, I don't see it.
Okay, John, you're basically asking me why we went long the euro.
No, why you went short up at 113, 114.
Yeah, no, okay, I went long the euro this morning. I'm sorry, okay, I'm going to put up the weekly chart here, okay? Let's put up the weekly chart. As you can see here at the bottom, we were setting at 107.60, okay?
Yes, you were, yep.
Yeah, and we bought that. There was a 3 drive to a bottom pattern, and then the market rallied up, and it stopped exactly at the 382 right there at the 115.10, I believe was the number. And I didn't sell there. What I did was I waited for the market to react, and then I sold the first little Gartley back on a half-hour chart that came in at around 113.30, I believe, and then from there it just broke down. Now we've taken out those lows. And so it's going to be interesting of where we move from here. But that was the reasoning behind the trade. I mean, I just look at the patterns and stuff, so I don't really, like when Alan asked about capitulation, I have no idea what that means. It means, following through and, adding to it, I believe, but I don't know how it revolves through the markets or anything. So I hope that answers your question, but that's the answer.
It does. It does clearly. Let me ask you a follow-up, if I may, sir.
Yes.
as we're looking at the weekly Euro chart on Tiger TV, thanks for putting that up, by the way. We're looking at a weekly chart decline for 24 months, 2 full years. From 125.26 down to 108. Okay. So down she went, just step by step by step for too long. I mean, that's for a trader's perspective, you and me, that's just an eternity, 2 years. And then within 2 weeks' time, surge. And then surge and pause right at the fib 382. You said it backed off, it bounced up a little bit, you took the trade, you put on the short. My guess is, do I guess correctly, you would have exited the trade at a loss if it went up and over that 382 resistance?
Oh, no, it had been long before that because we had sold it at 103.30 and we were risking 30 pips. The high on that trade happened to be 103.35. It was a perfect 61% retracement, as I recall. And since it's
got it. So
$10
just everything
a pip,
on the
I don't
long
like
term,
to risk
that weekly chart, and then the very short term just lined up perfectly with incredibly low risk.
Yeah, that's what you try to do is to, you got to throw a lot of darts, or you got to kiss a lot of frogs in the swamp, as we say, to try to get some winners. But when you do get them, you want them to, pay off a little bit. So we'll see what's going on. I don't know if I'm sure you're watching some of these commodities like beans and wheat and corn. Boy, I think they're having Christmas Day values down in here. So, keep an eye on that stuff, John. I think it's got a chance here to have a little bit of a rally. We might even get a 2-day rally in beans. Who knows?
you just might, Larry. Yeah, no, the same. I'll just speak right back at you. I'm looking at the same charts you are. I see the same thing for all the same reasons. So, so I'm thinking like you. Oh yeah, we could get a 2-day rally sometime. Maybe it's today. Who knows? But in addition to the beans, the bean meal, the same thing set up I guess it was Monday morning in the Kansas City wheat. That's already working. But I'll just share this with you. The 3 other commodities that just fit that bill just yesterday were cotton, actually cotton this morning, new crop December cotton. And I'll just say that new crop December cotton gets too cheap. Farmers just won't plant the damn stuff and guarantee higher prices just because at these cheap prices, nobody will make any money planting it. But so cotton, crude oil, which you're documenting very well, and I'll also mention this. I didn't buy it. I was too tired last night. I thought of it, but I said I needed sleep more than I did a winning trade. But that copper low at 197, Larry, that was almost an exact test of the 216 bottom. It bottomed right there at 197 last night. I had no idea why the panic selling hits starting at 8 p.m., but 8 p.m., 9, 10, into 11 p.m. New York time last night. Copper fell from $2.20 down to $1.97, and it's back to $2.16 now. So
you mean I haven't even followed, but my goodness, that's a monster move down and a monster move up. That means there's some type of a washout happened in copper today.
Well, that I forget the man who just called you from Nevada. But I think he asked you the question, is this what you call capitulation? Larry, I'm like you. I've learned well enough from you to look at the patterns and the numbers and forget those terms. But in the case of this copper, from 8 p.m. to 11 p.m. last night, that certainly seems to be capitulation selling to me.
Well, if that's a description of it, I guess that's it. So hopefully that helps.
All right. Hey, thanks so much on the details on why you shorted the euro up over 113. I now understand. I appreciate it.
Okay, you bet. I'm going to give you my 2 cents worth, folks, because I see so much fear in the markets. Nothing. This is actually worse than 2001 when we had 9/11. That was very, very scary because we really thought we were at war, and we are definitely at war this time. But what the people are doing in the news is not good, folks. I know they're giving us a lot of information, but it's something not right out there. I don't know why, but I've been doing this a long time. I've read every single book that's been written about this stuff that I know of. I've got a lot of them. But when you can get this many people to act so in such fear in such a short period of time, that's something different. Now, I could understand if 20, 30% or 10% or 5% of these people were dying right away. I know they are in Italy, but in Italy they French kiss their cats, so they do a lot of touching and feeling that we don't do here. End of my discussion on this stuff. Sorry, folks. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Bill Chapman on the line from Trend Reaction, and I found out this morning he's the twin brother of Basil Chapman. Is that true, Bill? Uh-oh, maybe I don't have Bill on the line. Uh-oh, hopefully we did.
My cousin.
Hello?
Basil's my cousin, once removed.
Is he really?
Oh.
I just because of the last name. Gosh, well, if that's true, terrific. Hey,
I'm sorry, I had to mute that because I was laughing so hard.
Hey, listen, I have to laugh in these kind of markets because it's so crazy. I haven't seen anything like this since 9/11. Bill, tell us what you're looking at and what you're thinking. Give us your bird's eye view of what you're watching here in the E-mini S&P.
Because I actively trade every day, I'm watching the market virtually tick by tick. And what we've been seeing over the past couple of days, especially, people don't understand actually the mechanics of the market. So one of the things that we have, for example, Wednesday, within the stock market, you get the margin calls. It's margin call Wednesday. Mm-hmm. And all those margin calls go in and slam the market down. But what happened thereafter on Thursday was quite telling. I have up my chart from Wednesday, which I was surprised to see my sniffer program actually hit at 12:10 when they did the lock limit down, mm-hmm. and the resumption of trading came at 12:11:17. But what I'm witnessing right now is that, and I'm going to make the argument that we're at or near the bottom if the bottom didn't hit yesterday. Because what I'm working with is a number of indicators and a number of technical resources at my fingertips. Patterns, as you well know, repeat, but it's also the elements that make up those patterns that repeat. Now, I've been working the S&P full moon in the 93-day cycle, and you'll always see significant bottoms form around 93, 94, 92, 96 days. And where we are right now is that we're currently at the 96 bar limit. And we are at the low of Boxer Day 2018, which should hold as support. As long as we don't go significantly below yesterday's low, we're working on a bottom. We're going to have some backing and filling. It's what I call stomping on the ice. But I believe just as much as Jeff Gundlach of Double Line that the bottom is in, and it's time to start getting long. There's trillions and trillions of dollars that they're going to throw at this market. The ECB announcing yesterday that they're going to throw 975 billion euros into their marketplace. You just have so much cash liquidity out there that once it starts to go, and once the market goes up another 200-300 points, people are going to see in maybe 5 days that, yep, the bottom is in. The other thing that I'm also watching, I have an indicator that I put together, and it's my exponential oversold indicator. And it has an acceleration factor in it. And any time as you see a market start to collapse, the gaps become wider and wider in the marketplace. The spreads become wider and wider. And that's essentially what my exponential oversold indicator is showing. And here it's at a record high. The only time it's been higher was 9/11. And when you're looking at, this is one of the elements that make up the patterns that we're seeing today. I also have just a simple chart here. It's my mutual fund index, and it's 35 of the best of the favorite mutual fund stocks. And we're working on a divergence between the S&P index and the mutual fund index. Those mutual funds, they're buying out there. You can look at the MACD on the bottom. You can see the divergence there between the S&P index and the MACD. And we're at a point in time when I woke up this morning and was going through the papers and reading the headlines, and it's music to my ears when I begin to see these headlines that, from the Wall Street Journal, market enters new phase where cash is all that matters. New York Post, Dow closes below 2,000 for the first time in over 3 years. The Financial Times, fear grips the market as faith in interventions runs out. The Washington Post, U.S. markets fall sharply as rampant volatility takes hold. When they all start singing the same song, at least on a media perception, it's time to start lightening up on the shorts and looking for the value plays out there in the marketplace and start to nibble. Because it's going to be maybe 7 to 8 trading days before the press picks up on it. And by then, we're going to have a rise of, 400 or 500 points. And I'm looking at going back to the highs here, back to 30.20. There's just too much cash out there floating. And there are a lot of people who've been waiting 10 years to get into the market, who've been so afraid to get into the market that they're looking at this as their opportunity for all the cash they're sitting on. It's absolutely incredible in living it. I mean, where else in such a short time span could you make 30% on your portfolio in a month?
Sometimes in a day.
Yeah. I thought I was a genius buying the UVXY at 1075 and then selling it at $26. Yesterday I looked at it, it was $126.
Bill, we have a question from one of our listeners, and that is, do you follow the volatility index at all?
I follow the volatility index every day.
Anything you're seeing there?
It's a great. I use it as an indicator to tell me which way, as a front-running indicator for the marketplace. And I'll give you something today if you want a tip. We have prescribed levels here right now on the spiders. We're looking at a possibility run on the downside to a level of 235.97. No, 229.31. 229.31, and on the upside to 241.02.
Wow, that's a big swing.
Yeah.
So you still think there's a possibility it could make a slightly lower low? That's pretty much is what your
It's not going to be by much.
Yeah, okay,
it's not
good. That's fair enough.
Because the between the VIX and the skew, the VIX is showing that the market is going to remain volatile until the prices begin to compress. But the skew is showing that 30 or 60 days out, they're expecting the prices to be much, much higher. Good talking to you, Larry.
Hey, Bill, thanks a lot, my friend. We've got your information on the line, so we appreciate your help, my friend. We'll talk to you later. Bill Chapman, Trend Reaction, cousin of Basil Chapman, I think.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and I think we have a caller on the line. Mike from Washington, Michigan. Can I help you, Mike?
Hi, Larry. Nice to talk to you. I haven't talked to you in, it's been 15 years, whatever. I'd like to know what you think about the crude oil right now. I know you said you had a short position in crude oil yesterday. I don't know if you elaborated enough to say that you saw a bottom in crude oil, or what's your position?
Well, I don't know about a bottom in crude oil, but that was the price objective we were looking for was 23. Now it got down to 20, and what's happened to crude oil in the open interest in the last couple of days with this market collapsing is a dropping in open interest, and that's not bearish. So we've had a little bit of a bounce today. $3 off the bottom, which isn't really very much, but I think it's going to have a hard time getting above $25 a barrel. My guess is, Mike, we're probably going to get into a trading range here between, say, 25 and 20 for a few days, where the market, tries to, catch its breath like some of these other markets that we're looking at. So that's a thing that I think we really need to, pay very, very close attention to. So whether that's going to mean anything or not, I'm not sure, but that's what we're looking at. So I hope that helps.
That really helps. It sheds light on some things that are happening. What about your previous guest, how he thought maybe the bottom is in, or it's starting to look like a leveling off? How do you feel about that? How do you feel about his views?
Well, he's a really smart guy. He's just a couple of years younger than me, so he's been around a long time. He's pretty successful, so you have to respect it. And I agree that I think we're at some type of a major bottom in here. And if we're not, then we're going to see something that is even going to be worse than what we've already seen. And the thing that I have to watch is if we do get a bottom in here, what's it going to look like? Is it going to be a straight-up move like we had for those 3-day rallies, or is it going to go sideways? What you'd like to see, if it's good, is to see volatility lighten up a little bit so that it doesn't scare the heck out of everybody. You know what I mean? And then that would be the one that would make it, make it real interesting. So that's what I'm paying attention to.
Larry, do you have an opinion on what the government should do to, to relieve some of this pressure on the economy? You hear a lot of people talking, give the industries money. I think that, in my opinion, I think you should be able to stop interest payments and just give the money to people to eat. If you could do that, and just like mortgages, put the payments on the backside and still accumulate interest so that it doesn't hurt. But just to take a time out for everybody. How do you feel about that? And where do you see our economy healing?
The one thing that would help everything, Mike, would be shut off all the televisions and radios for about 2 or 3 weeks. And I think that would give everybody a chance to realize that this is not the end of the world, and some of this crap that just got beeped by the FCC is not really true. So that's my 2 cents worth. But, I really don't follow the news too much. But the less the government's involved in our lives, the better. But that's neither here nor there, my friend.
I understand. Well, thank you, Larry, and nice talking to you again, and I'll talk to you again soon.
Okay, thank you so much, my friend.
You take care of yourself. Bye now.
Okay, you bet. Thank you, Mike, for calling in. We appreciate that about the crude oil, and the crude oil open interest has been dropping, so it's relatively important that we'll see if that is going to be the case. Who knows? Very interesting, and we'll move from there. Okay, let's move on to the next question, and that was about someone asked me about the Hang Seng Index. Here's a market that's gotten, this is a weekly chart, folks. They've had everything from riots to the flu over there. Do you know how many people? Here's a trick question for you. 7.2 million people in Hong Kong. How many people died from the COVID-19 virus? 5. And we talked to our Sarah talks to her son and daughter-in-law over there. They've been cooped up in the house for about 2 months, but very few people have died there. So I don't know. There's things out there worse than death, folks. One of them is watching your kids die. Hopefully that never happens to anybody, but if it does, that's got to be the number one thing. At least that's what my grandmother told me. She had 9 children and she lost 1. Okay, let's move on to a couple things I wanted to cover in some of these other markets. You remember I spoke yesterday about Larry Williams' indicator that he talks about, which is the panic indicator, and Larry's been around for exactly the same number of years I have been around. Here is his indicator. You can see it is certainly in the panic zone. And so whether that means too much or not, I don't know. The problem is, see, we're talking about fear here that we never had to do. This is far worse than 9/11, because 9/11, we thought we were at war with somebody we could see. This one is one we can't see. But the problem is what's in between what they're telling us and what's really true out there. My goodness, stop and think of this, folks. Just a few weeks ago, they were talking about it, and yes, there's a lot of people that are getting sick, but people get sick from the flu all the time. I remember, yes, you're right, Peak. I remember when I was little, it was polio that everybody was afraid of. And that was the thing. But this is we're gonna get through this. But it's just the news is just so wow. I mean, they're starting to fight on the in the buses and stuff now. I mean, that's not really very good. But that's neither here nor there. All I know is that keep an eye. Can someone tell me where Apple is trading, please? That's the key to me, because if we get below 325 in Apple, it's every man for himself would be my guess. But right now, Apple was holding up extremely well earlier this morning. And, of course, we're getting the early PBGBs in some of these markets to see. I would not be surprised to see the E-mini S&P get to 2357. You're kidding me. It's at 245. Get out of here. That's nothing. I thought it'd be around 240. Folks, Apple and Microsoft is saying there's a major bottom in here. And let me explain. Here, just show you something where we are. This is from the handbook that I'm coming out with here pretty soon. Look at this, folks. Here is how they price the options. Okay, as of yesterday, you see those blue lines right there. Okay, those are the blue lines. That's from Friday to Friday. And what that is, that's the number of standard deviations that they price into the market. They've priced in, you can see the low there at 2260. The low yesterday in the S&P was 2260. So as long as we don't go below 2260, 2 standard deviations is going to stop this market from going down. Yeah, Gator's selling about 56,000 people die of the flu every year. That's right. That's 1,000 a week. Plus, we got another 1,000 a week that die from smoking and stuff. So, I mean, look, stop, boys and girls, listen to me for just a second. This is ridiculous. Look how many lives have been destroyed over the last 2 weeks by the news. Marriott yesterday laid off, 120,000 people. Boeing, look at Boeing. We'll talk about Boeing in a second. But we'll be right back. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the first 2 charts. The last 2 charts are Boeing, long-term weekly, and then also the nearby is the daily. You can see from the daily, folks, Boeing was in big trouble long before this virus came out. They were having some trouble with these airplane-ness, whatever that number 70 is. But that was the problem, and all that the thing did was accentuate it. The problem is, folks, Boeing had a buyback program, $100 billion of their profits. They bought back their stock, and now they want the government to bail them out. Give me a break. I mean, they got to do something for them, but that's not fair. We got to stop bailouts like that from people that have bought their stock back. I mean, Apple buys their stock back, but they're acting pretty good actually. Folks, the reason why it's important for Apple to stay above 325 is because it pays out 90% of its profits in dividends and stock. So it's very, very important. If that fails, that means the big boys, and believe me, that's the largest held stock in the world. That means that there is no more that's going to be in trouble. So 325 and Apple. By the time Apple gets to 325, we're going to be far below 20,200 in the E-mini S&P would be my guess if in fact it breaks. It either stops here today, folks, or they're going to bring in some new rules. We'll have to wait and see. This is equivalent to where we were on March the 9th of 2009. That's my 2 cents worth, and I'm sticking to it. So we'll see what happens. Tomorrow, we are really lucky tomorrow. It is Happy Friday, and we have none other than the wizard himself from Naples, Florida, Norman. He calls it to the minute. Winsky will be on as our guest, and he'll be talking to us about some things about that are really happening in the market. And, of course, I believe we're very, very close to that new moon coming here on the 24th. And, by the way, today is the first day of spring, so make sure you go out and stand in the sun a little bit, get a little vitamin D. So live every day in an attitude of gratitude, and may God bless.